a few things when it comes to investing, and a tip that I'm going to give to everybody, because I've kind of been reading a little bit recently. And the number one tip is just don't be too smart when it comes to investing. But we'll get into that in a little bit. First of all, let's start with my portfolio and give you guys a quick update of my portfolio as far as M1 Finance goes and Robinhood goes. So the only big difference as far as M1 Finance goes is I made a little bit of a change in the consumer products division, and we can go into activity to see the change. I made the change of selling out of Lowe's, not because it's a bad company or anything like that, just because for me, I just didn't feel like I just didn't want Lowe's. Let me just put it that way. Initially, when I had gotten them, it was because people were hyping it up. And this is why you have to do your own study to know what companies you should invest in and which companies you're more likely to want in your portfolio. And Lowe's was just one of those companies that I just heard a lot of good things about. And I was like, I don't want to miss out. That's another thing. Fear of missing out. Don't do that when you invest. But we'll talk about that later. But so I sold out of Lowe's, and I was like, I don't really pay attention too much to Lowe's. It's more outside of my periphery than within my periphery. So therefore, I sold out of it, and that money got spent in my other 3 companies within that pie. This is one thing that I do love about M1 Finance. The fact that you're able to do these, what's the word I'm looking for? The fact that you're able to make, I'm looking for a word that just can't come to my mind right now. Partial investments. The fact that you're able to do partial companies where you're able to do, I'm trying to think of the word. What's the word that I'm looking for? I'm going into this one because it should tell me what the word I'm looking for. Give me 1 second. Yeah, fractional shares. That's the word I was looking for. The fact that you're able to buy fractional shares of companies is one thing that I love at M1 Finance, because then I'm able to build my portfolio from a small standpoint. As you guys know, it started off with $100 that I started building out this portfolio. If we go back to overall, and I've put more money into it. I mean, I've only gained $5. But the point of this whole investment strategy is just where it's consistent. And we'll talk about that in the future. And we'll talk about that here in a little bit. But it's consistent where I can always just put money into it, and it will always buy the companies that I have selected in this portfolio. Like I said, I think it was last week where I said I wish I had reduced the amount of companies that I wanted to be exposed to. I might actually sell out IBM as well, but where I feel like I should have reduced the amount of companies that I'm exposed to, where I should have maybe had less than 10 companies total, so that my money can go far faster and I can get some of those dividends back faster. That's one thing that I do regret with this portfolio, and it's something that I'm going to correct moving forward. So that's why one of the things I did was sell out of Lowe's, and it's very likely that I'm going to sell out of IBM here in the future. Not because IBM is a bad company, it's just not a company that I think I want to be exposed to. Healthcare, there's only 2 companies in there, and I'm a little bit too exposed to healthcare. I really only want 7% of my portfolio to be in healthcare. So right now it's very, very highly weighted. And then of course, consumer products, that's going to be the biggest part of my portfolio, in the sense, not in the sense of money being put into it, but in the sense of the number of companies that is probably going to be in it. Right now, it's just going to be Coca-Cola, Disney, Costco, and Walmart for the foreseeable future. I might make changes in there later on. And then finally, financial, this is probably not going to change too much. Maybe I sell out of Bank of America, but Visa and JP Morgan are ones that I really, really trust a lot. Apart from that, that's basically it as far as the M1 Finance part of my portfolio. Next week when we do another one, it's likely that this is going to look not very different, but slightly different, with more money being put in there. And I'm going to focus more on putting like I said, every 2 weeks, I'm going to be putting $40 into this account, which is not a whole lot. But when you do the math, $80 times 12, that's $960 in a year. And this is how you have to think about when you're building a portfolio or when you're investing. Don't think about just like, oh, it's just $5. What can $5 do for me? But $5 over the period of an entire year can make a huge difference. That's how you save money as well. It's literally putting little bits of money to the side, and then before you know it, you have $1,000 in your bank account, and you're like, I didn't even do anything. And that's the way you have to do these things. But anyway, the next thing I'm going to be, like I said, next week when I get put another $40 into this, is going to be focused on the consumer products division, where I want to buy more into the consumer products and kind of increase my weight on that because it is not so highly weighted. But the cool thing about M1 Finance is if I wasn't doing this manually, I could literally just do an auto invest, and it would always, every time I put money into it, every time I deposit money into this account, it will automatically just try to balance out all of my portfolios. So that's that. Moving on from there, let's talk about my Robinhood portfolio. Let's go to the start. So for Robinhood, we'll go all time because that's the way I like to view the portfolio. I don't really care about one-day stats. I've been doing decently overall. Let's get out of this. I want this thing to show. Yeah, overall, all time it says I've made $50. So that's pretty good. But at the same time, it doesn't matter. This number is a fictitious and fictional number because, as somebody once told me, whatever you have is only worth what it is when you sell it. So in other words, this can be $600, but if I go to sell it and the price drops to like $500, it means that it was only worth $500. So this number right here is very fictitious. That's why I don't pay attention too much to that number, and I'll talk about that more when we go into the topic of the day. But yeah, this number is very fictitious. It's very much like, oh, okay, that's whatever that they say it's worth right now. What's more important is the businesses that I selected to be in here. So one of the things that I did this week as far as this portfolio is concerned is, as you guys know, I've been talking about for Robinhood, I'm going to be focusing a lot on ETFs because Robinhood, until I get access to the fractional shares and being able to do my dividend reinvestment plan on Robinhood, I can't really select specific companies on Robinhood the way I want to select them and the way I can buy like fractional shares within companies. Where in M1 Finance, I can buy fractional shares. That's why in M1 Finance is going to be mostly focused on individual companies in there. But anyway, in Robinhood, for me, I'm strictly moving on into, like I said, into ETFs. And the main reason for ETFs is a way of doing fractional shares because ETFs can have multiple companies within one company, within one stock that you buy. So the one like I said in the past, I've bought a bunch of SCHD. And now I'm going to buy DGRW. And the reason I'm buying DGRW is because of the growth potential that it has and also the fact that it still pays dividends. So this has about 800 companies within it. I like a lot of the companies that's within it. As a tech head, I'm biased towards tech companies, which is not good because it's not good to be super exposed to just tech firms. If you look at my M1 Finance, a big portion of I'm going to tell you this right now. A large portion of my money is going to go to technology just because I'm a tech head and I like tech firms and I know a lot more about tech companies than I do about any other company. However, to force myself and limit myself to not be too exposed to it, that's where M1 comes in, to remove myself and let it automate. Because part of the problem when it comes to investing, which we'll talk about here in a short while, is we get in our own way of making progress. So that's why I set like different limits on myself when it comes to this thing so that the computer system does a lot of the work and every once in a while I'll come in. But right now I'm just starting off. $200 is not that whole bunch to manage. When I start getting up there in the amount, and even not even necessarily getting up there in the amount, but as I get more and more into where I like feel comfortable, I'll start letting M1 just do its thing, and just balance out my portfolio to make it look like it's supposed to look. I can't wait to get on this. Look at this. I'm 2,497,155 position in line to get fractional shares. This is one thing I hate about Robinhood. Like, Robinhood, please just release this thing. Just release this thing so people can actually use this. But however, it says that the way that I can move faster up in line is if other people sign up through my referral link. And also, if you want a free stock, and if you haven't signed up for Robinhood in the past, click the link down in the description. You get a free stock. I get a free stock. Everybody's happy. Well, most people are happy, and you can start, your investment journey, which I would advise you, if you're starting an investment journey, do not try to put too much money into this thing. At the most, $50 and buy like an ETF. And we'll talk about that here in a second about some of the things when it comes to investing. And then also, the other thing is, if you also want to start with M1 Finance, there's a link down there in the description. or in the show notes, whichever one you're listening to this on, where I talk where you can get $10 for opening a M1 Finance account. So that's pretty cool. And you can do those two things. But anyway,